In this video, you'll learn the 5 most important facts about how to pay estimated taxes so you can avoid estimated tax penalties. 1. What estimated taxes really are. You might be surprised to find out they aren't actually taxes at all. 2. Why you might have to make estimated payments. It's probably not what you think. 3. Who has to pay estimated taxes? It's not just about being a self-employed business owner. 4. When are estimated tax payments due? And why calling them quarterly taxes makes them even more confusing than they already are. 5. How to actually submit your estimated tax payments. There are several options. My favorite one is fast, easy, and free. If you watch all the way to the end, you'll find out how to download an absolutely free PDF cheat sheet with additional tax tips and helpful links to IRS resources. Thanks for visiting my YouTube channel. You're in exactly the right place if you want to learn the truth about estimated taxes. I'm Sheryl Schuff, and my current mission as a CPA is to end the confusion about this frequently misunderstood part of business taxes. Okay then, let's get started. Number 1, what are estimated taxes? First, you need to understand that the U.S. federal income tax system operates on a pay-as-you-go basis. Or, as the IRS cleverly says, pay as you go, so you don't owe. If you've ever been someone else's employee, you know that your employer takes federal taxes out of your paycheck every payday, sends them to the IRS, reports them to you on your W-2 at year-end, and you get credit for paying them when you fill out your annual tax return. When you're self-employed, whether you call yourself a contractor, consultant, freelancer, or independent business owner, there isn't an employer to do that for you. Here's what the IRS says. Stay with me here, it's a long sentence, but the details are super important. Taxes must be paid as you earn or receive income during the year, either through withholding or estimated tax payments. If the amount of income tax withheld from your salary or pension is not enough, or if you receive income such as interest, dividends, alimony, self-employment income, capital gains, prizes, or awards, you may have to make estimated tax payments. If you're in business for yourself, you generally need to make estimated tax payments. Estimated tax is used to pay not only income tax, but other taxes, such as self-employment tax and alternative minimum tax. Wow, that was a mouthful, right? In simpler words, here's what that means. Estimated taxes aren't really taxes at all. They're the way you make payments during the year towards the amount of various federal taxes you might owe when you file your Form 1040 for the year. Estimated tax payments can be required if you have any income other than regular payroll reported to you on a W-2. That's point number 2. Why you might have to make estimated tax payments. It's not because you're a business owner or your net profit is above a certain amount. Both commonly heard explanations that have likely led to your confusion about estimated taxes. Number 3, who has to pay estimated taxes? As I said earlier, it's not just about being a self-employed business owner. It's about all those types of income that were detailed in that long IRS sentence a minute ago. And it's about the relationship between how much money you pay as you go during the year and how much you owe at the end of the year. There are some exceptions, but generally, you'll be required to make estimated tax payments if you'll owe more than $1,000 on your Form 1040. Number 4, when are estimated tax payments due? The first payment for the year is due on April 15th when you file your 1040. The next is due on June 15th, 2 months later. The next is due September 15th, 3 months later. And the last one is due January 15th of the following year, 4 months later. When you look at it that way, it's easy to see that they're not spaced evenly throughout the year. A quarter of the year is 3 months, so if the payments were due quarterly, you'd have to make one every 3 months. But that's not how these work. And that's why it's confusing and wrong to call them quarterly taxes. If you don't understand that, it's likely your payments will be late and the IRS will charge you tax penalties. So make a note of the due dates on your calendar and set yourself some reminders so you can make your payments on time. Number 5, how do you actually make the estimated tax payments? You can pay by cash, check, money order, or electronic payment. The easiest way is to use the IRS direct pay system to transfer funds directly to the IRS from your checking or savings account. This method is totally free. Go to irs.gov/payments/direct-pay for detailed instructions. Again, that's irs.gov/payments/direct-pay. Okay then, we've covered the 5 most important facts about how to pay estimated taxes so you can avoid estimated tax penalties. To recap, here's a quick summary of what you learned in this video. What estimated taxes really are, why you might have to pay them, who's required to make estimated tax payments, when to make estimated tax payments, and how to make estimated tax payments. Thanks again for watching. I really appreciate you staying around till the end. If you want to grab that absolutely free PDF cheat sheet with additional tax tips, which I mentioned at the beginning of the video, jump over to my blog at SherylSchuff.com/blog/estimated taxes cheat sheet. Again, that's SherylSchuff.com/blog/estimated taxes cheat sheet. There's a clickable link to the cheat sheet at the end of the video description on YouTube. The cheat sheet also has a direct link to an IRS worksheet which will help you calculate the amount of your estimated tax payment. If you have any questions, please leave them in the comment section below the video. Hope to see you on the blog.